Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 30th. Today, we got initial jobless claims higher than expected, slightly higher, and consumer continuing jobless claims a little bit lower. So, mixed jobless claims. On top of that, GDP came slightly lower, but this is the final for the Q4 last year, 2.6 instead of the 2.7 that was the estimate. And overall, it was a pretty bullish open and also overnight. And despite the fact that jobless claims were higher, I think it was people expected way more than that. And this shows that the labor market remains super tight. So what are the Feds going to do? Well, most probably continue raising rates and being on top of the terminal rate much time than expected. So if we check the FOMC FedWatch tool, we can see that we are still 50-50 on 0 to 25 basis points. So analysts are still mixed on that. But now we got Fed Barkin and Collins saying something quite interesting. Fed Collins is saying that to help reduce excessive inflation, the Fed will have to raise rates again. Also, that the forecast of one or more hike in 2023 appears reasonable, and after another hike, Fed will most likely hold steady for the rest of the year. So that's the big news that we got right now during the Fed speech. And well, this is the Nasdaq. And since the overnight, we were same as yesterday, super bullish into the open. And into the open, we got several key spots that we were watching. First one is this pivot and last week high at 13,068. We swiped that a couple of times, but we couldn't hold it. This is the blue dot line, and then we have the point of control around 13,080. Super choppy market, super choppy price action, a lot of manipulation to the downside, also to the upside. I mean, this market doesn't know what to do, or if they want to do this, they are clearly manipulating. And more impressive is the fact that gold is doing a super squeeze until now that we know that rates are going to be higher. Dollar is starting to see weakness continuation, and as you can see, we are barely holding with the dollar, with the Nasdaq. The gold is now pulling back, but still super bullish. And overall, if we check the yields, overall the 2-year yield is flat, the 10-year yield is flat, and the only thing going up after this Fed Collins comment is December. It's spiking 1.25% to 4.4. So right now, if we are going to raise rates again, we are going to remain higher for longer. Why is this December in the bonds market not spiking higher until 475, this level that we are right now? Because bonds market, the markets are still betting on the Fed supporting the economy and starting cutting rates sooner. That's a big bet that I don't think that's correct. I don't think that's going to happen. And that's why markets are super choppy. KRE, the regional banking ETF, is down minus 1.78, Wells Fargo in the red, Goldman Sachs in the red, FRC in the red minus 3.79, and a new bank is falling. Metropolitan Bank Holding NCB is down 26%. So again, big issues in the banking sector and big issues in the overall economy. because we are in the middle of a decision. Fed are clearly saying that they are going to raise rates again, and banks are feeling the pressure. So why are we still up here holding? Well, I think part of the reason is because the weekly and the monthly finish tomorrow, and we want to finish strong to be prepared for next week economic data and earnings. But I think all this is a trap. I think we are not going to be able to hold these levels after Fed Collins' comments regarding a new rate hike, after Fed saying that they are going to be steady holding and not cutting rates for the rest of the year. That's clearly what markets are not betting to. So this is a misunderstanding, or they are willing to push price higher to then fall. Well, you know that manipulation clearly exists, and I think this is all fake strength in order for next month to just sell the heck off the markets due to recession, basically, and higher interest rates than expected. We'll have to see to react for that, but until then, this week has been horrible regarding price action. This week has been super choppy, super manipulated due to 0 days to expiration options, due to economic data, due to markets betting against the Fed and no one. I mean, this is all flowers, sun. I mean, this is not real. We should not be at these levels. It doesn't make any sense. And the more we are at these levels, the more we will fall with big strength to the downside. So be careful, because right now we are still in the green, but it doesn't make any sense. Price action doesn't want to go higher. There's a lot of resistance, and now the Feds are clearly saying that markets' strength are too much. So be careful with that. And that's all from my side. As always, thank you for your time. If you found this video useful, please remember to click the like button to support the channel, and click the bell, subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always. The market today and tomorrow is going to be super choppy. Tomorrow is PCE, personal spending, so be aware of that, and the amount of traps and what kind of movement markets are doing against the Fed. So place your bets, but discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.